Greetings, it's Dr. Jeffrey Scott, and this is my weekend market update for the weekend ending in Sunday, January 5th, 2025. Wow, we're in 2025. Can't tell you how many times I had to go back and change dates as I was working on slides and saving a couple of files. Email address is hgsidoc@gmail.com. If you have any comments, especially constructive, whether good or bad, either drop me an email or put some remarks into YouTube. Speaking of YouTube, if you hit subscribe, you'll get these automatically in your feed. If you hit the alarm as well, you'll get notification when I post these. I do this, I've been doing it for 20 plus years. I'm not here to solicit. I'm not going to sell you anything today. I enjoy talking about markets and sharing some of the things that I've learned doing this since the early 90s, late 80s, and still surviving and still doing it. I titled this with our new highs on deck before the inauguration. You know, it'd be easy to be bearish and think that the sell-off has begun. But, you know, we saw some strength in the market on Friday. I think the pain's going to come in after the inauguration and whether or not we see a recession or not, how big the tariffs are going to be. But I also think we could rally up into that point. So I'm going to put my rally hat on and let's see where the market goes. Obviously, I'll trade the market I get, not the one I think we should get. As always, this is for educational purposes only. Any recommendations in the spirit of education and not investment advice. The intent of this video is to show you how I applied various tools for top-down analysis. Trading involves risk, and you alone are solely responsible for any investment decisions you make. I may own or intend to sell any stock or buy any stock mentioned in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisor before making trades. I have tools for multiple platforms, but I'm an independent trader. For those that are new to this channel, typically on my weekend videos, I spend about 20 minutes talking about the market using slides, which are screenshots from the various programs I use that were done earlier today. Then I'll jump into live programming. Typically, I spend most of my time in wealth charts for this video. Why? Because Rob Hoffman, the proprietor, was good enough to put my tools inside and to give me one of their marketplace add-on opportunities. And also jump starters for those people that don't have wealth charts already, but also because it's probably got the biggest user base of any of the platforms that I have tools inside of. It's a good platform. I like to use it. Speaking of wealth charts, they also put on the Wealth 365 summits. They occur quarterly. This one occurs at the same time as the JP Morgan Healthcare Conference, so I will not be speaking at it. However, whether I'm there or not, wealth365.com. And then if you haven't already registered /Dr.-Jeffrey-Scott, you can sign up for free, no obligation, just using that link or any other link that you have access to. Go as much as you can. It's a great time to buy wealth charts. If you have interest in my add-on, you'll have to email me and I can let the folks know there to sell it to you at the program, the show price. And when I'm in between my meetings in San Francisco at the JP Morgan conference, I'll probably be listening in to Wealth 365 as well. If you like these videos and you want more of them, one way to get them is to sign up or go to stocksanddocs.com. You can put your email address and your name in the lower right-hand corner, and you'll get an email in your inbox each day that I do these videos. In a perfect world, I would do them every day during the week. In a perfect world, they'll be 5 minutes. Well, the reality is they're closer to 10, and I do them when I'm not traveling. Now, another way of getting access to me is through my Top-Down Trader Google group. Again, this is free. I'm not soliciting a penny from you today. How do you join this group? You just go into Google Groups. You search for groups. You find Top-Down Trader, 3 separate words. You join it, I let you in, and then what you'll find is most nights you're going to get a video and my thoughts on the market. And if and when I ever do solicit you to buy anything, you'll get notice that I'm having live sessions or something new to market, and you'll get discount coupons. It's free. Doesn't matter if you have bought something in the past. if you buy something in the future or you never buy. Just want to grow the group because it's the easiest way for me to message people and scale without getting filled with my email of spam complaints. Well, not complaints, but spam notification. Speaking of top-down trader, from time to time, I will do live events. I do them online, usually at no charge. I will be doing a 3-hour event on January 25th at 9 a.m. Eastern Standard Time. Why am I doing one in January? I try to do a quarterly education program after every Wealth Charts presentation or Wealth 365 presentation to support people that have just bought the product. But now I got products in TradeStation, soon to be a Metastock, Wealth Charts, my individual app, and TradingView. I'm inviting everybody. Now, how are you going to get invited? You got to join Top Down Trader. How much does it cost? Nothing. I will be speaking about how I approach the markets from a top-down perspective, why I do top-down, what are the various tools that I use, how do I identify high-value trades, and then how I trade them. For trading, I often use options, and I'll show you some of my favorite option strategies. We'll utilize multiple tool sets, even HGSI, other programs that I've used in the past. We'll also introduce you to the New Market MRI app, and I am only going to share the invite as of right now on the Top Down Trader group. Join. Major markets tell the story. Now, if you took out Friday, I would have said it was a pretty lousy week, but Friday changed a lot. On the left, you see, unfortunately, 5-day performance, not 4-day performance. I don't really have access to something for price change 4-day unless I do it manually. You could see over 5 days in yellow, all the major indexes were down, led to the downside by the Qs and the NASDAQ composite at minus 2.1. If you look in here in peach, you'll see the S&P 500 equal weight and the NASDAQ 100 equal weight. Although they are negative, they're significantly less negative than the cap weighted. For example, the NASDAQ 100 cap weighted was minus 2.1, equal weight was minus 1. S&P 500 was down 1.6, and the equal weight was down 0.9. So broadening out perhaps of strength and maybe punishing the cap weighteds. You could see on Friday that pretty much all of these were up, and the Russell up 1.5%. If you look at just the last 4 days, was enough to turn it positive up on the week that just was. From a sector performance led by energy and utilities, real estate, healthcare, clearly rotation, at least for the beginning of the week, away from technology and discretionary, which had been leading. Notice on Friday, the biggest performance was in discretionary. The second biggest positive was in technology, sort of reverting back to where we were. Santa rally. A Santa rally's good. Historically, markets perform better if you had the Santa rally. We didn't have a Santa rally in 24, and the markets performed pretty outstanding. So it's an old wives' tale. It's not a big move, but it'd be nice to have one, frankly. It's more than an old wives' tale. I'm just kidding. If you look at the S&P 500, starting on the 24th, so it starts end of day on the 23rd to capture the change involving the 24th, which is through the end of the year, so the last 5 trading days of 24, and then the first 2 trading days of 25. You could see that the spiders were down 0.5%. You could see the Mag 7s were down over 2%. What's interesting is there was a Santa Claus rally. Oil was up 6.5%. Bitcoin was up 5.8%. Commodities were up 3%. Semis, which might be an important theme this week, up 1.62%. Russell 2000, 1.36%. Gold was up. Dollar was up. IBD 50 ETF was up. ARKK was up. So yes, the traditional Santa Claus rally with the spiders, the NASDAQ Qs, was not up. But there were plenty of things that did rally during that period of time. Here is the Q Edge tool. So I use tools from other people, first to admit it. Sagar Nandi's his name, superiorprofit.co is his website. Each Sunday he puts out a nice hour-long video. His approach to the market, my approach are a little different. Some of it overlaps. We both spend a lot of time on talking about the market. And what he gives you is sort of a heads-up display that's live during the market, requires Metastock real-time for that. Just keep that in mind. But he tells me that on Friday, all the sectors were up, 86% of the industry groups were up, and 80% of the stocks were up in the S&P 1500. We'll talk much more about the buckets later. You could see if you look back over the last month, over a month, everything's been down. 85% of the stock's down over the last month. But over the last 5 days, we've now switched from negative to ending the week in positive. So are the markets about to turn around? This is another Sagar tool. This is called Market Breadth. Again, requires Metastock. And what this has given me a lot of different breadth indicators on the markets. I'll point out some of the highlights that I like to look at. Along the price, and this is a composite of the NASDAQ and the NYSE added together, you'll see things. You'll see circles that are green. Those are showing how many of the underlying indices were accumulating. In red, how many were distributing. Here is a list of them, and they correspond with these dots. The skull and crossbones is something called the Hindenburg omen. Fortunately, we haven't had one in a bit, and that are signals that call for potential top. The light blue is called the Bango. That's a buying everything. And the magenta arrows down is called the Bingo, which is selling everything, baby out with the bathwater day. Probably the most important thing on this sheet is this light blue line, something that Sagar adapted from some of my work, which is a 3-month or some programs a 13-week new high, new low. Why did he adapt it? Because like me, he has noticed that when this thing gets into the oversold area, the markets rebound. And when it gets into the overbought area, the markets pull back. So up here you have AD line, which turned positive on this broad spectrum index. On Friday, the up-down volume was positive, not much going on with new highs and new lows. If we break out on the left, we look at the NASDAQ. The right, we look at the NYSE. You can see the NASDAQ's come off the bottom where the NYSE is struggling to do that. You'll see that the 50-day moving average has held on the NASDAQ, but hopefully has not turned into resistance on the NYSE. If you look up here, stocks above the 50 in yellow, 200 in white, and then the 50 above the 200 in orange, you could see the breadth has broken down considerably on the NYSE compared to the NASDAQ. If you look at the various components, you could see that the S&P 500, the S&P 1500 are still pretty oversold, as is the NASDAQ 100. The Russell 2000, which had a better week than the large caps, actually moved out of oversold territory. I have a timing model that looks at 2 different indicators. It looks at what I call the Bongo, which is a trending indicator, and a WMA, which I use 30 periods. And the day both cross above, which goes back to November 2013 on the spider, and until you have both cross below, you will stay long. Right now, my timing model is long the spiders weekly, the Qs, the diamonds. It's only short the Russell. Now, we got above the WMA on Friday on the diamonds, which saved that one from being a sell as well. So on the surface, it still tells me it's okay to be long. I would be lying to you if that tells me to have conviction. The fact that 1 out of 4 is negative and 1 is close to being negative tells me, yeah, my stance is long. I have not loaded up the shorts, but I am not convicted and I've raised a lot of cash. You could see here the 13-week new high, new low on the spider, the Russell, and the diamonds is pretty low. not quite as low on the Qs. If you look at the daily here, you could see that all four of them are in a sell signal. So short term, I am concerned. I did add to longs on Friday after raising cash for the last week and a half. But longer term, I don't think this rally is necessarily over yet based upon the daily and the weekly charts. This is from my Market MRI Pro app, and it combines a lot of that information. If you look at one-day move, you can see Qs were up 1.6, Russell 1.5, Spider 1.2, and Diamonds 0.8, and VXX was down over 5%. Up here, you could see that the indexes that you want to be bullish all closed in the upper part of the range, which is very bullish, and the volatility closed at the bottom of the range, which just says a bad day for the VIX, which is good if you're long. Here you can see the NASDAQ, which has improved some, actually has some new highs versus new lows when you look out the 3, 6, and 12-month time frame. If I look at one-day performance, you can see discretionary technology, which lagged on the week, actually led on Friday. And over here, I have the S&P 1500, the NYSE, and the NASDAQ. You could see all the sectors were up on all three. Industry groups up were 89%, 85%, and 82%. Stocks up were 80%, 85%, and 68 rather, 70, and 80%. So the majority of stocks were up across all the different indices. Interestingly, the NASDAQ here lagged a little bit despite the Qs outperforming. And when I say lagged, I'm really looking at the stocks advancing, the 68% versus the 70 versus the 80. Over 5 days, you could see that volatility had the lead up 3.88%. And over 5 days, the indices were all down. Again, this includes the prior Friday, and but they all closed at the upper part of that range. Over 5 days, you could see the leading was energy and utilities. This stuff is real time in the app. There's no outside data required, and it's a way of monitoring the markets during the day. I look at a lot of things underneath the surface. I like to look at interest rates. We could see that on the week, 10-year was down 0.5%, and the 30-year was up 0.06%. So I'd say mixed or flat, and I think we're all waiting for those FOMC minutes. Is there a recession in our near future? Well, we've had the normalization of the 10 minus 3 months and the 10 minus 2-year curves. And if one looks at what happens after the normalization, you get these gray bars. These gray bars represent a recession. So I think odds are a recession is coming. They're always coming, so you're not ever going to be lying when you say that. When is the question? I think it would be natural to occur after the inauguration, but maybe we don't get one. And maybe if we get one, it's very shallow. No evidence here on the BOA high yield index option adjusted spread of tightness, which you'd expect if there was a recession. And notice that the last time the Philadelphia Diffusion Index was out by the Fed was reported was December 19th. We've got one coming on January 9th. Most of these recessions occurred when that dropped below 20. So I'll be seeing what this comes out. A drop below 20 would probably increase the narrative that we're going to see a recession. Breadth improved on Friday's rally. You can see a hook up on stocks above the 200, stocks above the 40. And this is Warden's version of their 13-week new high, new low. This thing means nothing to me, except when it's down at the bottom or the top, and it tells you to get ready for a reversal. Now, I thought this was interesting. The NASDAQ composite, broad-based, not just the NASDAQ 100. And the NASDAQ 100, the blue of the Qs, the index, and the yellow, the NASDAQ AD line, of the 100 are both going down. On the NYSE, index and AD line, both going up. On the Russell 2000, both going up. Now look at the large cap Russell 1000. The index is going up and the AD line is turned down. Does that suggest we might have some pain in large caps coming? And then look at the NASDAQ. The index is turned down. The AD line is turned up. Does that mean money's flowing into the broader based NASDAQ? I don't know, but those are signals that I will be watching to see if that does support and may support rotation into the small caps. The buckets. This takes all the stocks in the S&P 1500 and asks the question, how many here are above or below the midline of the Bollinger Bands, which is the 20-day moving average? As you can see, 3/4 of the stocks are below. That is bearish. Where are they between the Bollinger Bands? -10 or less than 0 is below the bands. Greater than 1 is above 0. You can see most of the stocks are accumulated in the middle of the bottom of the Bollinger Bands. Also bearish. How about Hindenburg Omens? The last one was December 16th on both the NASDAQ and the NYSE. Now what we want to do is start to see the new highs and new lows, at least the new highs increase and new lows go away. So maybe we've beaten the Hindi and maybe we're not going to see a big pullback this time. If we look at EdgeRater, where I ran all the stocks above $2 and 250,000 shares, and I looked at performance versus ERG. ERG is EPS rank plus relative strength rank plus group rank, pretty much up across the board. If I down here look at return versus EPS rank, really can't say that high earning stocks did better. And in fact, if you look at relative strength, some of the low relative strength stocks actually outperformed. So there was some more rotation this week. Over here, you can't read it. But what it tells you is that it was a mixed week with probably the majority of the groups that I follow were up. But it was not a clean, everything was up or everything down week. In November, I built a list of leaders, no more than 2 per index group, and all of them had to have lower left to upper right curves. The hypothesis has always been when the leaders roll over, the market follows. Well, the market topped right after Thanksgiving, but it's not broken down. In fact, all it's done is pulled and has tapped 1, 2, 3, 4, 5 times. It's tapped the 50-day moving average, which we learned from our friend, mentor, now deceased Ian Woodward. Free parking. All great stocks will pull back to the 17-day, and most will pull back to the 50 during an uptrend. If that 50-day holds, we can still break out to new highs. It's holding. Know your news and earnings this week. What do I see is important? We got some Fed head speaks. We got the FOMC. We got some employment, jobless claims, and we got the monthly employment report. So a number of job-related data points to come out this week. The FOMC minute's really interesting. I think people now have reduced the expectations to 2 cuts in 25. And I think that's going to go up or down based upon inflation and what the Fed has to say. You could see earnings start this week. They really start in about 2 weeks in earnest. But you could see we got Delta, Bristol Myers Squibb, Constellation Brands coming in on Friday as earnings season kicks off officially. It is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. So market had a mixed week, which included the final sessions in 24 and the final sessions of the Santa Claus rally in 25. The indices lost steam going into the end of the year after a very strong year. Small stocks outperformed this week, but you could see the major moves the S&P and the NASDAQ had in 2024. Broader indices outweigh the cap. That might be a good thing, showing strength to the broader markets. As I mentioned, or will mention, the January effect favors small caps. We may be seeing that play out. I look every week at over 1,000 charts before I do this review, and boy, was it easy to find bullish setups. Last week, not so easy. SMAH may be emerging from a long base, And let's watch and see if NVIDIA takes us to new highs. I added to my longs on Friday after such a strong day. I hope to see some follow through this week. Earnings season is starting. Add an inauguration, more data. We could see increased volatility, especially later in the month. And I'll look for that FOMC report to give us an insight into potential rate cuts. Now let's go look to the charts. So again, just to remind people of my Stocks and Docs site and to join my Google group, especially if you like to spend 3 hours with me and my friends in a couple weeks and go into detail where these data points come from, how I build out my evaluation, and how I find stocks to trade. End the show right there. Let's go into the slides, into the programs. So we are now in wealth charts. If you hit F11 in wealth charts, you get it to go full screen. If you hit it again, it will come out of full screen. I like using it in full screen, but it does limit me for switching to the next program. The red line represents where we closed on the session. Let's see, get my dates in the calendar right. Yeah, I went back and I looked to where we closed on the 23rd, and that was really dictated was the Santa Claus rally. And you could see that this is where we started. You could see we finished below it, and therefore it's pretty safe to say that the Santa Claus was negative. If we look at Friday, it was a super strong day in the market, gapped up, closed at the highs of the session, and you can compare that to what we saw on Thursday here on the 2nd, where it traded higher and then sold off. Here is New Year's Eve, which would have been the 23rd, which we sold off. And so it was really not a great week until we got to the last hours of the market week, specifically Friday. If I look at, this is the spider. If I add all the major ETFs, these are the mid caps in the Russell. And there's no question, especially as we look at the end of the week, but really the whole week, the leadership shifted away from those big cap tech names. Let's take a look at the major indices. Spiders over here, you could see a lot of lines. I apologize for that. The spiders were up Friday 1.25. They are still languishing below that 50-day. That worries me. That worries me. We've got support right here, which was prior resistance turned into support. So we're not far away from where support is. But if we don't get above that 50, we're not going to go anywhere to the upside. If you look at the weekly spiders, you could see a negative week down 0.5%. And this is my EMS signal, which has given me an early sell signal. If I look at the Qs behaved much better. They pulled down orderly to the 50 and bounced. Much more optimistic there. Qs were up 1.64 on Friday. If I look at the weekly on the Qs, really has come down minimally, and the weekly was down 0.76. This was an all-time high here, and the last spider all-time high is back a couple of weeks, but we're not far away from all-time highs on the SPYs. We looked at Q weekly. We look at the diamonds. The diamonds are giving us perhaps some positive divergence here. I guess that's because the RSI had a lower low here than here. And that'll be interesting to see if that propels us higher. Like the S&P, the diamonds are languishing below the 50-day moving average. Where's my next support? Probably in about this level here. And then below that, we've got the 200. If I look at, so the spiders were down just a bit. On Friday, they were down, actually, they were up. Say it again, the diamonds were up 0.79 on Friday. On the week, they were down only 0.66%. And then the winner on the week was the Russell. But like the diamonds, like the spiders, it's sort of stuck here. And I could almost believe it's forming a bearish wedge, perhaps, and which is a breakdown pattern after this breakdown here below the 50 and below prior support. If I look at the weekly on the Russell, you could see it was up nicely almost 1% on the week. Now, you might ask yourself, but Jeff, why are you so bullish if you sound so bearish here? So this is TradeStation, and people ask me what's my favorite platform. And usually what I tell them is which one do I use for my presentations? And I use mostly wealth charts. TradeStation's a great platform too. It's got some advantages and some negatives. But what it also has is indicators and educator support that might not be inside wealth charts. This is more of the work from Sagar Nandi. He has automatically generated trend lines, and notice that the 4 major futures have pulled back into trend lines. And then he has these things here, and I believe that's a stretch, or is it a headwind or a stretch? He uses 2 different things. One of them is a headwind, one's a stretch when you pull back too much or you're too high. So you could see the plus coming in at the peak, the plus coming at the peak, the plus in the circle at the peak, the plus in the circle at the peak. I wanted to see the pluses and the circles coming in at support before I get excited. And we got them. So I think it would not shock me if we don't rally off here for at least a little bit. Let's take a look at the dollar and volatility because we know how important they are. The VIX on the week was up 1.13%. The VXX was down. Let's see. You can see UVXY on Friday was down 8.5%. Let's just look at the UVXY on a week out of curiosity. And on the week, the UVXY was down 1.66. So volatility really didn't do much this week. Not a big shocker when we look at this. The dollar is interesting. Now, I'm perplexed about what happened here, and maybe somebody can put it in the commentary. Maybe it was a future month resetting, but I couldn't find a reason for this drop. And when I look at the futures, not at the UUP, I don't see this. So let me pause this for a second. All right, so here I'm looking at TradeStation, and I'm looking at the continuous dollar futures. Couldn't find the symbol in wealth charts. That's why I paused it for a minute. And you could see that they didn't have the same drop here. So must have been something mechanical related to how the UUP is calculated, whether it was a change in future duration, I don't know. But what I wanted to show you in wealth charts on the dollar, which I think is remarkable, and if you want to see the dollar reverse, which I would like to because I'm an equity trader, we are right at an area where the dollar has trouble before. So I can't explain what happened here. And if you can't explain it, put it in the comments. But the dollar at least looks here like it reversed from an area of a major top. And then short term, the dollar has rallied off of that bottom. I am a little bit concerned because when I do look at that other platform, I do not see that the dollar has broken down at all, and therefore maybe a little bit less encouraged. I just open up the weekly out of curiosity. I'm just going into a weekly on the futures, and you can see that we are right at that area. So I don't think I want to take a victory lap yet on the dollar. Could be an anomaly using the UUP. So again, if somebody can tell me the dollar future symbol for wealth charts, it'd be much appreciated. Or if you have an explanation about why you have sort of a difference between the dollar and on the futures and the ETF. If we go into commodities, gold is just consolidating under the 50, was down a few bits, 0.79 on the week over on Friday. And if I look at silver, it failed to 200, although it was up 0.19. We had a nice breakout in oil. I'm not sure if this is anything more than a little technical rally, perhaps with some of the stuff going on with the Houthis and concern on shipping. But you can see that the U.S. oil was up 1.29% USO. And you can see natural gas spiked and is now coming back to reality. And here's the 10-year, and on the week, the 10-year was, on the day, was up 0.83. And if we've already looked at the weekly in the slide, so I don't need to do that. We've already done the timing model. I like to look at the S&P 500 hourly sectors. And this gives me ratio charts of the various sectors versus the spider. And what I'm looking for is leadership. Now, we had leadership in discretionary, but that's come down some. We had leadership in tech, that came down some. What's rebounding and moving up the most? Looks like energy. We'll see if that's sustainable. Communications is doing okay. And the technology discretionary are still doing fine. What had been teasing us, the rally was staples, defensive, but they gave it up on Friday. And real estate, utilities, and healthcare all showing a little bit more strength in staples, but they are more defensive things. So are we just reverting back to where we've been? And are we going to see tech, discretionary, and communications lead? We might. I'm watching energy right now. If I go into the scanners, let's go into the heat map and take a look at some of our favorites. So what we have here is NVIDIA. And NVIDIA, I have a big, it's probably my biggest position, which was painful when it rolled down here. Not so painful right now. It broke out and I added to my position. Here was a flag, a clean breakout. The yellow line was the 50. Here is a breakout and a momentum dot to go with that. This here's my high-low jump. Anything less than 95 tells me it's not extended. Relative strength versus the spider moving average, positive. OBV, a little bit positive. I think NVIDIA looks great right here. Obviously, I'm talking my book, so I'm hoping it continues to look great. But I've been waiting for it to close above the 50, and we got that close. Tesla, I might as well start extending this thing. I'm not interested in Tesla until it really breaks above that area. Tesla's pulling back. Natural place to stop is the 50. Apple, like Tesla, pulling back towards the 50. Doesn't have to get there before it moves. Netflix, which is typically the earnings star in quarter one. Let's just take a look at the seasonality. Let's type in Netflix, NFLX. And let's move these things to where the dates make sense. Let's move this to that out of the way and move this thing to beginning of January 8th. All right, we'll leave it on January 8th. I'll move this one to like a month later, February 5th. If you look at Netflix, must have done something wrong here. All right, let me just stop here for a second. Let me just type on this. Oh, it doesn't like what I did here, I guess. Maybe I got them in the wrong order. I've got to put this here with January 8th. Sorry about that, everybody. And move this here for February. Well, that is strange. That should be telling me performance. But I will tell you, if you look at Netflix, for example, and you look at 10 years of data the next 4 weeks, Netflix is typically, I'm bullish, right up here, 11.9% move over the next 4 weeks. So Netflix is always one to watch this time of year. And if we go back into here, we could see that Netflix is pulling back. Kind of a flag. I'd be looking for a breakout of that flag. I don't think I'd buy it just because it's got earnings coming, but I'd recognize that if it gives me a setup, it's a good time of year to be there. Meta, pull back to the 50 and trying to bounce. If it clears the 17, may threaten the prior highs. Microsoft, not so good. A breakdown below the 50, don't like that. Amazon, kind of like a couple of the others where it's still above the 50. I like to see it get back above the 17. Could certainly take that, pull it down here and see if we can't break out. Maybe we're breaking out above that. Amazon doesn't look too bad. I like to see it go higher before I jump into it. And then Google also flagging up here above the 17 or at the 17. So I think mixed bag, mostly bullish on the MAG 7. If I go into Wealth Scanner, let's see if we saw improvement at the end of the week because we were not looking good to the bullish side. So notice we still don't have anything above 800. What's leading? Oil, commodities, space exploration, gasoline, Final Frontiers ETF, that must be rockets, but notice we dropped so quickly down to the 600s. That has me nervous. Now, my assumption is that this is already updated because we're on Saturday and I reset the program before I started. If we look to the bearish, you're going to see a lot more activity. On the bearish, the biggest number is minus 520, and you have staples, but we've improved because we had a number of things that were minus 520. Since I'm not ready to go all out and out bear, and I'm still more bullish than bearish, I'm going to start looking at stocks from a bullish perspective. Now, I love scanning. On Friday nights, I like looking at a lot of charts because it gives me a sense of what's happening in the stock market and where I might want to put my money in or out of the market. And typically, my favorite thing to look at are pullbacks and uptrends. Now, a couple of things to point out. The way I look for a pullback and an uptrend is I look for a scenario where the weekly bongo is green, meaning the weekly is now in an uptrend, and the daily bongo within the last 9 bars flipped from red to green. Something like NVIDIA, which clearly had a pullback in an uptrend, had not yet flipped its weekly bongo, so it would not show up in the scan. So I have different ways of adjusting the scans because of that. But if I look for pullbacks and uptrends, and I look at some of the things that come up to the top, there are a number of stocks here that I saw on my review this week that look good. So let's take a look at some of them. Airbnb. Now, I don't like to buy stocks below the 200, especially when it's so close because there's often resistance there. Is your uptrend, your pullback? Here's the weekly bongo going red, sell to green. The weekly's green. I want the relative strength to be above the moving average. I want the OBV to be above the moving average. It's got a breakout and momentum dot, but it's so close to the 200, so I would probably pass. Adaptive biotechnologies. I don't know anything about this. I think this might be in the pregnancy world, but you'd have to do your own research. Nice looking uptrend, pullback and going again, breakout momentum out of a squeeze, not extended, less than 95, and relative strength's great. OBV is not there yet. That looks interesting. Ambarilla. Notice Ambarilla's got a line on it. I've been looking at this because I was waiting for it to break above that trend line, which it did. Breakout momentum from the squeeze, your uptrend, your pullback, your breakout. Not extended, relative strength looks great, OBV not quite yet. Dexcom is another one way below the 200. Maybe it's trying to do something. I think there's many better. Harmonic, big sell-off here. I think it was an earnings miss. And you could see 26 versus 22 isn't a miss, but you wonder what the expected was. And it's been moving up ever since. It's taken out the 50 and the 17. Pretty big volume day on Friday. Breakout momentum dot from the squeeze. Relative strength looks good, not extended. OBV not so good. I'd skip that one. LTBR, I think this is in the nuclear power plant space, which is hot right now. And it ran up. This is sort of a mime stock looking pattern. It's pulled back, short base, and looks like it's ready to go again. Big volume day on Friday. Relative strength and OBV look good. Do your research. That looks like a meme stock. Marvell is a semiconductor. I mentioned already NVIDIA. Big pullback, big run up, pullback, and looks like it's getting ready to go. SMH I thought was very interesting. SMH, it has been basing for some time. And is SMH ready to rumble? And if so, Marvell looks good. Taiwan Semiconductor was another one of these that looked good to me. Nice uptrend, pull back to the 50 and running again. ACHC, I don't know if this one's mental health. If you like bottom fishing for nuggets, here's something that's sold off hard. Don't know what's going on here. I do my research. But since there is about 20 points between that 50 and 200, it could rally up nicely before it gets into resistance. It's one that I'll be watching. AdTran, don't even know what they do. But uptrend, pullback, and a breakout. That's my pattern. Out of a squeeze, not extended. Relative strength looks good. OBV, not so much. Arista Network, one that I often talk about. I wish I owned it as much as I talked about it. Steady uptrend. A week ago, I was talking about GDS. Why was I talking about GDS? Because it had pulled back and closed right above the 50, and it moved up this week. Not a lot, but it moved up over 10%. Also talked about Kingsoft Cloud last week. And, you know, the challenge is it's hard to buy it here. And I always like to talk about how these things have a tendency of pulling back. And that's when I start to draw my trend line and say, if and when it takes that out, I might want to be long. Guess what? It took it out. So Kingsoft might be interesting. Don't understand this stock. It's a 3D printing stock. It's showed up a little bit of late. NNOX broke out above the 200 on good volume. Volume breakout momentum, relative strength and OBV looks strong. It says it's extended by high jump, but when we've gone sideways this much and the moving averages are all together, I ignore that. Now, if I want to take away the requirement for the bongos to be the right, I just go to momentum up. Let's see if there's any 4-dot stocks that come up to the top. So we know that Rocket was one of those ETFs that were leading. I'm not really good at these stocks. I don't get them. They don't make money. I don't know when they'll make money. But this was a rocket that came back to Earth, and it seems like it might be getting ready to go again. AST Space Mobile. Just looking to see if there's any of the others that I looked at. Affirm. Sometimes holding things that die work. I have a guy that I'm very close with, works for me, used to work for me before he quit on me. He went back into practice, which I can't blame him. And he was holding this from about this point all the way down to the 20s. And I hope he didn't sell it to buy his lovely bride her ring, because this thing is back to life. I like the pullback to the 50 on Affirm. I think that looks very interesting right here. CEG, Constellation Energy. There's a couple of utilities that I'm very high on. This is CEG, breaking out over the 50. Another one that I like is VST, which is Vistra Corporation, pulled back and now breaking out and running. Got some amazing earnings in that stock. Fortinet in the cybersecurity space, a little bit of a pullback here and a breakout above the 17 on Friday. Robinhood goes up when the crypto does well. And again, I'm already in this, so you don't see a new line. But when I see things I like over the weekend that I'm interested in buying, I'll draw the line in it. And then when it breaks above the line, I go and I review. I think Robinhood looks good here. Again, I already have a position in it. One that was a big leader in the electronic components field is Powell Industries, P-O-W-L. Look at this amazing move it had, and then it had a big pullback. Look at the volume coming in here as it's put in a halt. Obviously not extended, relative strength in OBV picking up, may have some overhead supply with people thinking if it only gets to where I bought it, I'll sell it. But I like Powell here as well. Speaking of my doctor buddy that left, another stock that he held all the way down, and I hope he's still holding it because it's back, is Roblox. You got to have nerves of steel or a lot of money, in my opinion, to hold stocks that, let's see if we can get some more space in here. You know, that round trip. So here's a stock that went up from 80 to 140, down into the 20s. And now it's running again and it's back into the 60s. But way off of its prior highs. You got to know where these things came from. Usually holding on to things, hoping and praying they get back and prove you right in the first place, doesn't usually work. But in Roblox and Affirm, they're working. Lastly, I want to show you a couple other things. Here's a couple of the other stocks that I'm watching closely. APP is one that we were in earlier in the year. It's the kind of thing you wish I never would have sold. But boy, I bought it down here. I sold it with the gap up, thinking made my year, and it almost doubled from that point on. It's pulled back. It's got earnings growth, I think, to support the multiple. I think this one looks really interesting up here. What else have I not told you? Now, I don't know if it was on one of my top-down trader calls or last weekend. I talked about, it's been a couple of weeks. This stock here, CRNC, really gapped up, and it showed on my screens back here, which was, 3 weeks ago. I nibbled on it here. I don't usually buy cheap stocks, but I was impressed with the move it had. Came out with earnings. It lost 7 cents versus 38. And the thing drifts higher, and you don't always know why. And then kaboomy, it announces that Amazon's got an investment, not Amazon, NVIDIA has an investment. And if you don't think that matters, SOUN, sound hound. I didn't buy this one when I heard that story, but looked what happened in another stock that this is when NVIDIA announced their investment. It came out of it, and then now it's running back up. Another one of these AI stocks that benefited from a NVIDIA investment is SERV, Serve Robotics. Again, are these meme stocks and are they doomed to fail? They might be, but sometimes these things will run. What else do I have on my list? I got a couple more here. FTI in the oil services space. Run up, pull back to the 50, and now running again. And then AGX, industrial play, industrial gases, Airgan. Giant uptrend, pull back to free parking, just like my leaders index. And what happened on Friday, breakout momentum from a squeeze, good relative strength, not extended. That looked interesting. Now, in my Market MRI Pro, I built in a number of additional scans. And I'm just going to show you one thing of where I find some of these big movers. And what I like to do is I've got my JAS list here, which includes all the stocks in the S&P, the NASDAQ and the NYSE, filtered for $1 and 100,000 shares. Let's just filter it a little bit. Let's filter it. I only want stocks over 500,000 shares. Y'all have your own parameters. That's mine. I want price over $5. And then I want 2 days momentum up. And most of these big winners have been showing up on this list. Constellation Energy. And in the dots, the same dots in Wealth Charts and TradeStation, the first dot is momentum. And what you're looking for here are 2 of these dots in a row. And you can see breaking out over the 50. Another one that looked good is Kyndryl Holdings. This is an IT stock. Basing and then a big breakout on Friday. MTZ, Mastech. There's your flag and a breakout. Braze technology play. Pullback and a breakout. And I don't have time to go through all of them, but a lot of the stocks that I play are showing up on this scan. And what it's really, I think, doing is it's making sure it's not a one-day wonder, and it's showing in a positive technical picture 2 days in a row of a big move. And I'll just end with one of my favorite stocks that I haven't talked about yet, and that's GE Vernova. This is in the solar and the alternative space. Obviously, it's had a massive run, a consolidation, and a pullback to the 50. And I think we just took out the prior highs, and I think we're running again. Prior closing highs. GE Vernova, and it made the scan as well. I hope you have an awesome week. Again, Happy New Year's. Hope you had a safe and happy one. And I'll be back to Stocks and Docs each day this week until Friday when I travel, and I'll see you next weekend. And please, if you like what I'm doing, I got a no-cost offer for you. Join my Google groups. You'll get this on a nightly basis. You'll get videos that I don't post anywhere else. And you'll get special offers on my tools when I launch them. And I'm not here to solicit your business. If you want, that's great. If not, just enjoy the information. Thank you.